Be honest. You work way too hard just to feel like you are financially stuck in the exact same place year after year. Meanwhile, you watch other people build massive wealth, and it feels like they know some secret you don't. Well, they do, but it has nothing to do with luck, a rich family, or having the right connections. The only thing separating your bank account from theirs is one incredibly simple concept, and you have been missing it this entire time. In this video, I am going to show you exactly what that secret is. If you stick around until the end, you are going to learn how to stop trading your time for pennies, how to actually make your money work for you while you sleep, and the exact mindset shift you need to step off the sidelines and finally start building real wealth. Let's get into it. When you own shares in a company, you're not just buying some abstract financial instrument that bounces around on your phone screen. You're literally becoming a part owner of a real business. Think about that for a second. Every time you buy shares, you're essentially walking into a boardroom and saying, I want a piece of this action. Let me paint you a picture. Imagine your neighborhood has this amazing coffee shop that's always packed. The owner, Sarah, realizes she needs money to open a second location. Instead of going to a bank for a loan that would saddle her with debt and interest payments, she decides to sell ownership stakes in her business. She divides her coffee shop into 100 equal pieces and sells 50 of them to people who believe in her vision. You decide to buy 10 of those pieces for $1,000 each. Congratulations, you now own 10% of this thriving coffee business. Fast forward 3 years, and Sarah has opened 5 more locations. The business that was once worth $100,000 is now valued at $500,000. Your 10% stake that cost you $10,000 is now worth $50,000. But here's where most people get it wrong. They think the magic happens when they sell those shares and cash out. That's completely backwards. The real wealth building happens while you're holding on to productive assets that generate value over time. Every month the coffee shop is operating, it's creating cash flow, serving customers, and building brand recognition. You own a piece of all of that activity. Now I know what you're thinking. But what if the coffee shop fails? What if Sarah makes bad decisions? What if the market crashes? These are valid concerns, and yes, there's always risk when you own productive assets. But here's what most people don't understand about risk. The biggest risk isn't losing money on an investment. The biggest risk is inflation slowly eating away at your purchasing power while your money sits in a savings account earning practically nothing. Let's talk numbers for a moment. Over the past century, the stock market has averaged about 10% annual returns. Compare that to the average savings account paying less than 1%. Even accounting for the inevitable ups and downs, that difference compounds into life-changing wealth over time. A $10,000 investment growing at 10% annually becomes over $17,000 in 5 years. The same money in a savings account becomes about $10,500. But the real magic happens when you extend that timeline. That same $10,000 growing at 10% becomes over $45,000 in 15 years. In a savings account, it becomes about $11,600. See the difference? This is why patience isn't just a virtue. When building wealth, it's absolutely essential. The key insight that changes everything is shifting your mindset from thinking about stock prices to thinking about business ownership. When you own shares in a well-run company, you want that company to succeed long-term. Short-term price movements become irrelevant background noise. You're not trying to time the market or predict what happens next week. You're betting on human ingenuity, innovation, and the natural tendency of productive businesses to create value over time. Here's something that might shock you. Some of the wealthiest people in history have made their fortunes by simply buying shares in great companies and holding on to them for decades. They didn't have special insider information or complex trading strategies. They understood that owning productive assets and letting compound growth do its work is the most reliable path to building substantial wealth. Think about technology companies that have transformed how we live and work. Early shareholders in these companies didn't just benefit from rising stock prices, they participated in one of the greatest wealth creation events in human history. The same principle applies to companies in healthcare, consumer goods, energy, and countless other industries that improve people's lives while generating profits. But you don't need to pick the next big winner to build wealth through stock ownership. Diversifying across multiple companies and industries reduces your risk while still giving you exposure to economic growth. When you own shares in dozens or even hundreds of companies through index funds, you're essentially betting on the continued progress of human civilization. That's a pretty good bet, historically speaking. The beautiful thing about owning productive assets is that they work for you around the clock. While you're sleeping, the companies you own are serving customers, developing new products, and expanding into new markets. Your ownership stake gives you a claim on all that activity. Many companies even pay you quarterly dividends just for being an owner. One of the biggest mistakes people make is waiting for the perfect time to start. They want to buy when prices are low and avoid buying when prices are high. But here's the thing, time in the market beats timing the market almost every single time. The sooner you start owning productive assets, the more time compound growth has to work its magic. Starting with small amounts is perfectly fine. You don't need thousands of dollars to begin building wealth through stock ownership. Many brokerages now allow you to buy fractional shares, meaning you can own pieces of expensive stocks with just a few dollars. The important thing is developing the habit of regularly purchasing ownership stakes in productive businesses. The psychological shift that happens when you truly understand stock ownership is profound. You stop seeing market volatility as something scary and start seeing it as natural fluctuations in business values. You stop worrying about daily price movements and start focusing on the long-term prospects of the companies you own. You stop thinking like a speculator and start thinking like a business owner. This mindset change affects how you evaluate investment opportunities. Instead of chasing hot tips or following market trends, you start asking fundamental questions. Does this company solve real problems for customers? Does it have sustainable competitive advantages? Is management focused on long-term value creation? These are the questions that lead to wealth-building decisions. The path to financial freedom isn't complicated, but it does require patience and discipline. By owning shares in productive assets and holding them through market cycles, you harness the most powerful wealth-building force in history. Your money works harder than you ever could alone, generating returns that compound year after year. The choice is yours. You can keep your money safe in accounts that barely keep up with inflation, or you can become an owner of the businesses that drive economic growth and prosperity. The companies that improve lives, create jobs, and push society forward are always looking for partners. When you buy shares, you become one of those partners. So I have a question for you. If you could own a piece of any company in the world right now, which one would you choose and why? Drop your answer in the comments below. I would love to see what businesses you all believe in. See you in the next one.